Morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, April 20th, 2012. Access to this video is for educational and informational purposes only. Neither Options University nor its affiliates nor any of their respective officers, personnel representative agents, or independent contractors are licensed financial advisors. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. So with that, let's take a look at this last week. As we've gone through the first 4 days, we saw that as the beginning of the week, there were not a lot of things that were really going to move the market. But then we got to Thursday. Jobless claims Thursday morning, 8:30 before the market opens, and they disappoint. Again, jobless numbers, first-time filers seem to be increasing as we break into this second quarter. Existing home sales were nothing to get excited about. Philadelphia Fed survey also disappointed as manufacturing around Philadelphia doesn't look all that great. And the only thing that we had that was bright in the day was the economic leading indicators. And with that, the market decided to do things that markets do. We've had earnings this week so far, and as we saw, Yum Brands kind of blew the numbers away. Chipotle Thursday also blew the numbers away and had great earnings, great revenues, good forecasts. And Friday, McDonald's will be giving us their numbers for the first quarter. We'll see how that comes in. In spite of all that, as we looked at the market on Thursday, we saw that on Monday we had a down day right around that 50-day moving average on the SPX, and we see that we went into an upcycle, and that didn't last long. As Wednesday and Thursday we got a pullback, big pullback today, big red candle, but still closing above that 50-day moving average. So the upcycle that we had in place ended today as we got a lower high and a lower low. Actually had about the same high. We went up in the morning and then pulled back, and we actually dropped below that 50-day moving average. Still managed to close above that 50-day moving average. Before, we were sitting below the 10 and the 30-day moving average, but we're still above that big 50-day moving average, which is ever so important to us. We'll see whether we're going to bounce as we go into expiration day on Friday, or what's going to happen to us. Usually, this can be a very bullish week for us, but so far, we are doing nothing but consolidating. And if you remember, we talked about that we can consolidate at this level before we head back up, as we are sitting here in the end of April, and normal cycles in the market would have us be somewhat bullish as we go April and May, and then have our pullback for the summer. As we look at the Dow Jones, we see that we got much of the same type of information, and we see that on Monday I started up, Tuesday we had a big day up, and then the last 2 days we've been pulling back again as we're trading within this cycle on the Dow. It continues on. NASDAQ took a bit of a beating today as we had some problems with Apple leading the market down. Went below that 50-day moving average and then basically closed right at it. Notice the 30 is still above the 50. The 10, however, has pulled below the 30-day moving average, showing us that we're in this sideways trend with the NASDAQ, with the Dow, and even the Russell 2000 is basically showing a little bit greater strength than the NASDAQ and the S&P and the Dow. And what that shows us is that this Russell may begin to lead us back up again as it heads back up for those higher numbers. We still expect some continued rally, looking for that big head and shoulders on the S&P and the Dow that we have yet to get. The volatility, of course, shot up a little bit today. Not all that much, as we see that as the market pulled down. No big change in volatility. The VIX still sitting below that 20-day and living in between the 20 and the 15, as we fully expect. Bonds, we see, have rallied as the markets pulled back. No big surprise in that. We see that the bonds are back in that upper range that had spent so much time at the beginning of the year in, after that little bit of a dip during that last market rally. So bonds showing strength, and of course We keep calling for a bond pullback, but it won't do it until it's good and ready. We look at the financials, they pulled back with the overall market, bounced up with the overall market. So the financials have basically been following the overall market and certainly have been one of the big gainers as we look at the beginning of the year here. Starting down there and working its way up to those higher levels. One of the big sectors as far as the market's concerned percentage-wise. Oil dipped down with the overall market, staying below that trend line, headed towards this previous low. With some support today, we'll see whether oil continues to pull back. It would be nice to have a little relief in some of the gasoline tax. The gasoline prices. We'll see if that actually takes place. Gold pulled back today as we see gold below that $1,600 mark, which is exemplified by this gold ETF. And we see gold is still pulled back, has not regained its strength where it once was up around that $1,800 an ounce. Finally, as we look at the volume for today, you notice we had that pullback, but it was in big volume as we had that pullback. Still closing above that 15-day average, moving us with some kind of a tail there. As we see, it did everything it could. That underlying strength has kept it above that level. As we see, we're basically in the sideways trend with the SPY, the SPX, and the Dow. All right, so with that, we've got stocks to watch for those of you that are gold members. Hang on, we'll actually take a look at some of these charts we've been watching for the last couple months, as these are our momentum stocks. For the rest of you, listen, thanks for spending your time with us. And this is Butch Shorak, Options University. It's Friday, April 20th, 2012. An interesting week in expiration weekend. We'll see as Friday develops exactly what will happen with the market as we're consolidating, moving sideways. Are we going to break lower? Or are we going to continue in the same sideways motion? And if we are in a sideways market, what kind of strategy are you using to take advantage of this kind of market? So on behalf of Options University, if you'd like to hear about more of our free videos, there will be a website that you can go to that will be presented to you at the end of this particular video. So for those of you that are leaving us at this point, thank you for being here. For our gold members, hang on. We'll continue on as we look at the stocks to watch.